Have you ever heard of someone named George Soros?
Time and more nights and on your journey to hand and on our journey and they'll all deep pay you that powerhouse. No, I think there's a sense of guilt that feels good. I'm wrong about everything. I am. I'm there to make money.
Known as the financial wizard, he's the one who attacked the Thai baht and caused the Tom Yum Kung crisis. I've made clips about this crisis before, but reading about it is all frustrating politics and economics. When it gets to George Soros, details are scarce. It just says George Soros is the rules of finance. Attacking the Thai baht? I wondered, does attack mean something violent, like a robbery by a criminal gang? Not at all. George Soros just walked into a commercial bank, signed a contract, and that was it. When it was time to collect, he brought the contract, exchanged the money, and took home billions. Then he left the devastating Tom Yum Kung crisis behind in Thailand. So in this video, there will be some history and background, but what I really liked and went to look up is the step-by-step how-to on attacking a currency. Seriously, step-by-step. Support and credit to Soros, the father of finance, for the information on how they attack the Thai baht. You can support the Sai Money Monster channel by scanning this QR code. Or if you want to support the Sai Money Monster channel, just leave a comment and chat with us. We read them all, and we'll try to reply to everyone. Or hit like, share, and most importantly, if you haven't already, please subscribe. Just once is enough. Don't hit it again if you already have. And if you like it, feel free to send it to your friends. This group tells really fun stories during meals. Check your notifications so we can meet again in the next clip. Don't miss it. Thank you. The Tom Yum Kung crisis in Thailand in 1997 was partly caused by domestic factors. But when it comes to external factors, it was triggered by a handful of extremely wealthy and skilled forex traders. The main leader was George Soros from his quantum fund. He basically bet with billions of dollars, and later on, he swept up profits, literally billions of US dollars. He made billions without having to build a company, invest, or hire a single person. Hearing this, the first question that comes to mind is, was it really George Soros who caused the Tom Yum Kung crisis in Thailand? Did he really attack the Thai baht? The answer is yes. I actually found an interview clip with George Soros where the host directly asked him, "Mr. George Soros, may I ask you, are you involved in the collapse of the currencies in Thailand, Indonesia, Japan, and even Russia?" George Soros answered right away, "Yeah, that's all true." The host then asked, "Wow, are you really that powerful?" George replied, "Actually, no, not really. People misunderstand. Because for me, Soros, I see my job as making money, making profits. I run a quantum fund, right? So all I know is how to make money and profits. I don't really know what impact my actions will have on the economy after I'm done. The society of the countries where I operate, what happens to them." So before George Soros started attacking the currency, he strutted confidently into a commercial bank in Thailand back in 1997. At that time, Thailand was at its peak. People called it the miracle of Asia, and it was on its way to becoming the fifth Asian tiger. The state of Thailand back then was that it was growing rapidly, transforming from a country known for its slums and people rowing boats across canals into a city with towering skyscrapers and beautiful expressway cutting through the city, making it look vibrant everywhere. Between 1985 and 1996, Thailand's economy grew at an average GDP growth rate of 9% per year. Thailand's GDP grew from about $40 billion in 1985 to $183 billion per year in 1996. And if you compare that to other countries, the rate Thailand's growth at that time was considered the fastest in the world. It was a decade of leaps and bounds. Thailand's income tripled, and the stock market grew by 800% in those 10 years. Anyone who invested during that period became a Thai stock market millionaire. Hearing all this, the question is, with Thailand doing so well, where was the weakness? Thailand's weakness was in pegging its currency. George Soros found a loophole. The primary and most significant issue at the heart of Thailand's economy was the practice of pegging the Thai baht. Pegging the baht meant that the Bank of Thailand had promised that no matter what happened in the market, if you brought in $1, they would give you 25 baht. Or if you brought 25 baht, they would give you $1 forever. This is what is known as a fixed currency rate. No matter what, one single US dollar would always be equal to exactly 25 baht. No matter how much supply or demand there was, we would still sell at that price. Even if the baht went to 50 baht per dollar, we would still sell at 25. Why? That's all there is to it. Can you see now how pegging the currency rate is really like a key point in the economic system? If you ask, why did Thailand have to peg its currency? That's a good question. Give yourself some credit. Because at that time, Thailand was quite concerned about investors. And is it necessary to care about them? Well, yes, it was necessary. Part of the reason Thailand became so incredibly wealthy, like the miracle of Asia, was because Japan needed to relocate a significant portion of its manufacturing base, and a lot of it came to Thailand. This was during the 1980s. Do you remember? I've talked about this in several of my videos about Japan. Japan was also experiencing miraculous growth, growing so fast it was about to overtake America. The US didn't like that, right? So basically, America handed Japan a silk noose, which was the Plaza Accord. That was when a group of countries came together to sign an agreement to adjust the exchange rates, but somehow, after everything was said and done, the currencies of all those countries weakened, except for Japan. The Japanese yen shot up in value. In just 2 years, the yen went from 240 yen per $1 to 120 yen per $1. At that time, it was basically a death sentence for Japan because it caused the country to lose its international competitiveness in a big way. For example, Japanese cars like Toyota, which used to sell in the US for about $1. But when the yen strengthened from 240 to 120, right? That meant Japanese companies had to raise the price of the same Toyota car with the same quality from $10,000 to $20,000 just to make the same amount of profit in yen as before. Because of this, Japan realized that if they didn't do something, they'd be in serious trouble. So Japan decided if manufacturing in Japan is going to be this expensive, let's move our production base elsewhere. They started looking at what options there were, and one of them was Thailand. Countries like Thailand had low labor costs, were pleasant to live in, and were attractive for investment, so they decided to come here. Once Japan moved its production base to Thailand, it took less than 10 years for Thailand to really take off. That's when people started saying Thailand could become the fifth tiger, and it was during that period. This means that Thailand really needed and still needs to pay special attention to Japan because Japan was the major investor at that time. The main pain point for Japan, the reason they had to move, their production base to Thailand was really about currency value. So what Thailand offered was currency stability. Remember earlier when I mentioned that the Plaza Accord made the Japanese yen stronger, which forced Japan to move its production base to Thailand? So Thailand said, okay, we'll stabilize the currency. But this was just one of the reasons. At that time, the Thai government needed to peg the exchange rate to give those big Japanese companies, Honda, Toyota, and others, confidence in the stability, because it would allow them to calculate. Costs are easy to calculate, expenses are straightforward, and profits are predictable. There's no risk. But another really important point is that at that time, the government wanted to peg the currency and not let it float freely. That's because there were a lot of government and economic policies back then that encouraged Thai business people to borrow money from abroad. And when they borrowed, honestly, it wasn't really for business purposes. Remember this, whenever there are policies that lead to a lot of borrowing, when money comes easily, people don't use it for anything difficult, they go for the easy stuff. For example, they put it into the stock market or use it to make quick profits or buy real estate, not to live in or for business, but just to flip it for profit. This eventually led to the real estate bubble. You can clearly see what happened back then. The economic numbers showed it because there was a huge inflow of capital into the country. But if you look at the balance sheet, Thailand's trade balance was actually in deficit. Even though, wait, didn't they say? All right, teacher. Now in this part, we're going to get into how George Soros attacked the Thai baht step by step. We'll break it down so clearly that you could actually follow along. just in case anyone's planning to attack some country's currency right now. Just kidding. Honestly, you can't really do it anymore. First of all, the economy has grown so much bigger now. The same amount of money George Soros used back then wouldn't be enough today. You'd need a lot more. So you'd have to have a lot of money. More than $1 billion. 2 billion might not even be enough. And another thing is, once something like this happens, everyone goes through a learning curve. People learn and adapt. So the financial and legal regulations have changed. They're not the same as before, and you can't use the same methods anymore. But I'll still tell you how they attacked the baht back then, the billion-dollar strategy of George Soros in attacking the Thai baht. It started with the first step. George Soros signed. He signed a contract with a commercial bank called a forward currency contract, or a currency forward contract. This kind of contract basically says, we agree to buy or sell today, but we fix the exchange rate for a future date, according to however many days we specify. For example, we might say, in 6 months, the rate will be this much. So George Soros said, I'm going to use 25 billion baht to buy US dollars, $1 billion, because $1 equals 25 baht, right? So 25 billion baht would be equal to $1 billion. But within 6 months, I'll come to collect it. The bank must contract George Soros too, saying, all right, in 6 months, we'll have 1 billion ready and you can exchange your 25 billion baht for it. This method is called a short sale. A short sale means we agree to a contract to buy or sell today. If the currency weakens, that's when George Soros makes a profit. That's what a short is. But if the currency strengthens, he can't make a profit. The question is, George is betting this much money, billions of dollars, 25 billion baht, which was a huge amount back in 1997. How did George know that in 6 months the baht would weaken and he'd be able to make a profit? Like I said, George's job at Quantum Fund is to make profits, right? He probably saw a lot of things coming because if let's look at this graph right here. First, this is the graph of the Thai baht during that period. You can clearly see that the value of the baht was totally flatlined. It was weirdly tight for 6 years straight. 1, 2, 3, 4, 5, 6. And then the last bar, boom, that's when the Tom Yum Kung crisis hit. When George Soros was looking at it, he hadn't seen that explosive bar yet. But he could probably already predict that this strange way of pegging the currency was exactly the kind of opportunity that would allow him to short sell. Then, in March 1993, or 2536 in the Thai calendar, the Ministry of Finance issued a license called the International Banking Facility, or the Bangkok International Banking Facility, abbreviated as BIBF. This license basically encouraged banks and investors in Thailand, business operators and such, to borrow money from abroad. And as I mentioned, a lot of those who borrowed money from overseas, what did they do with it? Right, they used it for speculation, buying up real estate, speculating until it created a real estate bubble. And the third point is that George Soros knew that the Bank of Thailand would have to use its own dollar reserves to maintain the currency's value because of all the forward currency contracts they had entered into. The Bank of Thailand had made those commitments. And George Soros thought that his quantum fund was big enough, to be the one. He set the stage and led the trend in attacking the Thai baht. And he wasn't wrong, because later on there would be many others who would enter into forward currency contracts with Thai commercial banks, a lot of them actually. Now, let's look at who ended up being the unluckiest in this situation. Because George Soros told the commercial banks, I'm going to prepare 25 billion baht, so you get $1 billion ready for me. And as soon as the commercial banks got the order, they were like, okay, what should we do to protect ourselves? As commercial banks, let's take the 25 billion baht and buy dollars from the Bank of Thailand first. So the commercial banks took the 25 billion baht to the Bank of Thailand, exchanged it, and kept the $1 billion at the commercial bank, holding onto it tightly, waiting for Soros to come and exchange the contract. So George Soros was safe because he had a contract with the bank. He was safe because he already had the $1 billion in hand. The ones who were unlucky were the Bank of Thailand. After George Soros set the trend by placing a $1 billion bet through a forward currency contract, many other hedge funds followed suit. For example, Julian Robertson's Tiger Fund placed a $3 billion bet, and there were others who did the same, making forward currency contracts with commercial banks as well. That means they used Baht to reserve dollars in advance. So what did those commercial banks do? They did the same thing as the first bank. They took the Baht and bought dollars from the Bank of Thailand to hold on to. This means that the supply of Baht was flowing into the Bank of Thailand in large amounts, while the supply of dollars was flowing out of the Bank of Thailand in large amounts. At this point, if we follow normal economic mechanism, it wouldn't be 25 baht per dollar anymore. It should actually be weaker than that. The Bank of Thailand should have to pay out fewer dollars, and the commercial bank should have to bring in more baht to exchange for the same amount of dollars. But that wasn't the case. In fact, at that time, there were calls for the government to have the Bank of Thailand devalue the baht. But at that time, General Chavalit Yangchayut, the prime minister, refused to do so. While he refused, people were still making contracts to buy and sell. These forward contracts were basically a tax on the baht, increasing in intensity. This caused the supply of baht to flood into the Bank of Thailand even more. And as I mentioned, the dollars just kept flowing out. So what did the Bank of Thailand do? They fought tooth and nail, no matter how much the currency should have weakened. The Bank of Thailand was still determined to honor the agreement, paying every single dollar at 25 baht, always. You would never get less than that when exchanging for dollars. For every dollar, it was like they were cutting themselves and just kept paying out, suffering all the while. In December 1996, the Bank of Thailand had foreign reserves of $37.9 billion. By June 1997, the Bank of Thailand's reserves had dropped to $30.9 billion. And as I mentioned, there were so many banks, hedge funds, and others entering into forward contracts to buy and sell currency to the point that on July 2nd, 1997, do you know how much the Bank of Thailand had paid out in total in US dollars? It was $23.4 billion. This left the Bank of Thailand with only $2.8 billion in US dollar reserves. It was almost $40 billion before. Another thing that many people might not know about that time is that when Thailand was left with only $2.8 billion in US dollar reserves, on that day, Thailand also had to pay for oil imports, which amounted to $4 billion. But if Thailand didn't have the money to pay this $4 billion in the following weeks, Thailand would have defaulted, gone bankrupt. In such a pressured situation, on July 2nd, 1997, the execution order was handed down right in the heart of Thailand. The government floated the exchange rate, and the baht quickly lost half its value. On January 12, 1998, it hit a record low of 56.5 baht per dollar. That same month, the Thai stock market plunged 75%. Finance One, Thailand's largest finance firm, collapsed. The Thai economy, once the miracle of Asia and a rising fifth Asian tiger, suddenly came crashing down. This meant that anyone who had borrowed money from abroad, whether to do business or for anything else that the government had previously encouraged, let's say they borrowed $1 million. Before the currency was floated, that loan would have been worth 25 million baht, right? But as soon as the baht was floated, that 25 million baht debt doubled overnight, from 25 to 50 million. Who wouldn't be shocked by that? Now, back to George Soros. So, what was the next step? How did George Soros profit from the contracts? So how did he hedge or protect himself? Well, at that point, the government had already announced the floating of the currency, right? That meant $1 went from being worth 25 baht to 50 baht. So George Soros took his $500 million, went to the bank, and exchanged it for 25 billion baht. Then he took that 25 billion baht, along with the contract he had previously signed, back to the same commercial bank to withdraw the $1 billion according to the contract. This was George Soros's method of attacking the Thai baht through the quantum fund. He used only $500 million in capital and managed to turn it into $1 billion in the blink of an eye without having to invest, build a factory, or hire anyone. And it's true. Just like George Soros once said, "My job is to make money and profit. I don't really know what impact it will have on society and the economy in the country. What am I supposed to do?" Now everyone knows it turned into the Tom Yum Kung crisis, the messiest financial crisis in Asian history.